Imagine a place where you could invest globally, enjoy great tax advantages, and also get a variety of different investment options in foreign currencies. Yes, I'm talking about global investing, where you could be on par of any of the global investors. Yes, we have such a place in India, which is called the Gift City. If you want to know more about Gift City investing, stay tuned till the end. What is Gift City? Gift City stands for Gujarat International Technology FinTech City. It's located in a special economic zone in Gujarat. The purpose of Gift City is to rival some of the global financial hubs like Singapore, Dubai, and so on and so forth, Hong Kong. Now, the idea is to attract more and more funds to come in. And the way it is structured is that it gives tremendous advantages to people who park their money in the Gift City in the form of tax advantages, ease of operations, and so many more benefits. So as an investor, it's extremely important that you must also look at as an investor to invest into the Gift City. Now, what are the options for investors who want to approach Gift City investing? We can divide this into two parts. One is what we call an inbound investment. Inbound investment means for foreigners or non-resident Indians who are outside of India wanting to invest in India, Gift City could be a fantastic route. What are the problems that such investors today face? Such investors have a problem because if they have to bring money inside India and invest, they need a PAN card, they need an Aadhaar card, they may need a KYC to be done locally. All of these creates problems for an investor who is situated outside India, who may not have a PAN card. Gift City investing avoids all that with a very simple process. Regulatory, it's a very simple process. It allows for all these people to invest in whatever be their currency. If it's US dollar, they can invest in US dollar. Their investments are held in US dollar. The company or the fund which collects that US dollar will then convert it to Indian rupees and then invest into Indian markets. So this is what we call an inbound fund. Now, an outbound fund means it's for Indians. And as per the RBI regulation, under the liberalized remittance scheme, what is called LRS, an individual can invest about 250,000 US dollars outside of India. Now, why should you invest outside of India? Given that the Indian market or Indian stocks account for only 5% of the global stock markets, I think we represent a very small component of the global equity culture. It's important as a part of diversification to put some money away from India as well, not to have all your eggs in one basket, as they say, which is why Indians need to look at a certain amount of diversification outside of India. And that's where Gift City comes into play. The outbound Gift City allows Indian residents to invest money in dollar-denominated investments. It could be in exchange-traded funds, it could be in stocks, it could be in a variety of different instruments outside of India. Now, this Gift City investments, what are the advantages? Let's look at what are the advantages of these Gift City. First up, the regular taxation doesn't apply. It's a tax-free environment. So to say, there is no STT, there is no stamp duty on investing. All those norms which we are normally subjected to within India do not exist in the Gift City. Second, it has very, very limited regulatory overview. The idea is that unlike in India where you have to do a KYC, you have to do this document, that document, X, Y, Z, investing in the Gift City is a reasonably simpler process. Not too many documentation to go with. Third, it's a very important diversification route. Like I said, India represents only 5% of the global stock market if you were to take the globe. And India does not represent all the themes. India is a great market. We're doing really well. But if you wanted to invest in the semiconductor story, we don't have a single company listed in India. If you wanted to invest in a electric vehicle kind of a theme, there is no fund. We don't have themes for artificial intelligence yet, but all these are reasonably mature themes, and there are companies in the world which are already doing really, really well on this. So this overseas investing or the gift city investing could be a route by which you can take exposure into some of these investments. That's another reason why you should look at this. Now, what are the negatives of global investing? Many a times, size is a constraint. Many of these funds have a minimum ticket size. There are, of course, some retail ticket size starting from 5,000 US dollars, but most of the bigger ones are $75,000 or $150,000. Again, there is a differentiation between a regular investor and an accredited investor. An accredited investor is an investor who is a more senior person who has more investment knowledge, so on and so forth. There are, of course, criteria for both. The accredited investor numbers are much lesser. They can invest with a smaller amount. The regular investor has a higher amount. So the ticket size in many of these cases, starting as small as 5,000 can go up to 75,000. In many cases, it's also 150,000 US dollars, which is a lot of money for an average Indian investor. Second, the investments are held in US dollar. So the US dollar currency performance also impacts. Now, while for external outgoing investors, it can be a benefit because dollar is getting stronger all the time. For people investing into the country from foreign countries could have a problem because dollar strengthening means their investment returns at the end of the day gets factored to that much lesser. But hopefully Indian markets will deliver a